Good morning, everybody. Welcome to another YNAB Whiteboard Wednesday. My name is Jesse Meekum. I'm the founder of YouNeedABudget.com, and today we're going to talk about how you can possibly merge a small side freelance business into the same budget that you carry your personal household budget. And it's a little bit of an advanced topic. It's not the only way to do it. You could keep two separate budgets, but for those that have something really small on the side and kind of are already having a mix of personal and business income and expenses, this might be a way you could track it better than what you're doing now. If it grows to be of any consequence, I would recommend that you two separate accounts, different charge cards for each of those accounts, so you can have the debit card for home, debit card for business. But if that's not the case, where this is just small, but it's worth tracking and tracking well for tax purposes or whatever, you can do it this way. I've gotten a couple requests on this, so I thought I would point it out. So let's pretend that we have our budget here, and we have our categories, our normal master categories. And then we've got some subs here as well. And you could have your normal home and whatever the normal master categories are for your household budget. All you need to do for your personal, to bring in your business budget, is you just make one master category. And you jump in there, right, with all of your other expenses. So if you're just a small-time photographer, for instance, you could have expenses like film, gas to get to photo shoots, computer and camera equipment, I don't know, whatever you would need. But these subs all go under this business category. Now, when you bring in business income, instead of recording it as income available this month or income available next month, you can reserve that income specifically to when you pay yourself. So when you actually bring income into your kind of personal sphere, personal budget, and you can just record income directly to your master category. So when you want to write that income, instead of doing income available, you would just write, oh, I forgot to write a really important line here. You would have a subcategory called income. Okay, so now we've got that there. So you record that to your business income category. And then you've got this surplus here. Let me just show you our three common columns. Okay, and this is advanced, but this is just one way to do it. Oh, you have your spent right here. You got your budgeted here. And you got your balance here. So the way we're doing this now in YNAB 3, you'd be able to see really easily, because this would be a positive number instead of a negative, which is normally what spent is. And let's say you are paid $1,000. So on the register, you record that income, business income, as an inflow, and you get that $1,000. Okay? And then you want to budget to your different categories. This is the part where it gets a little bit tricky. You want to reverse it or pull it out of the income category. So negative, you budget negative, pull money out of the category. This becomes zero. That money moves up to your available here because you're pulling it out. Now we know we're just using this as a very temporary holding position. And then we say, okay, I'm going to budget $200 for gas, and I'm going to budget $800 for my new computer that I'm saving up for. And then you've got your balance of $200, balance of $800. This, you've budgeted that money, is now back to zero. The business, all of the business transactions are only ever reaching that business income. When they do hit that available, it's just a temporary thing to move it so you can budget it to those categories. Another possible way you could do this, if you don't want it to touch the income available at all, is this way. doesn't actually touch that income available. I shouldn't say that. It just would show up in your available for a second because it was budgeted or negatively budgeted. But one other way you can do this is, remember, you've got that income balance of 1,000, let's say, before you've budgeted. You could actually record transactions only on the register side in your business account. So you got your business account, and we're going to make sure these balance. So I can record a split, or not. I could do all separate transactions. Let's do it separate for now. And I could say income. Remember, this is business income. We already have that $1,000 in there that we earned. But now on the outflow, we're going to record that $1,000. Okay? And then we're going to say, well, I want to budget money to these other categories. So for that camera and computer equipment, we budgeted $800, so we can record an $800 transaction here. And then we also had gas, where we said $200. So what does your account equal right now? You had an inflow originally of business income of 1,000. You have this kind of fake outflow of 1,000, and then you've got your transactions here, both inflows again into these different categories. It's kind of like your budgeting. On the budget side, you would see those balances change. You'd see your business income balance go from 1,000 to 0, because you're subtracting that 1,000 back, and then you'd see your camera balance jump up 800, and your gas balance jump up 200. And so you've affected the budget by way of the register. You can see why I'd want to put this in a split, because this could look confusing, because you've got real transactions. Like then if you actually spent money for gas, you know, you really have like a transaction that's hits your bank statement. You have this gas, and that equals, let's say you spent $100. You know, so this one here is a real transaction. These three are just fake. The ones to allocate to different categories. And that's why you could see where you'd want to put it in as a split. So it'd be really nice to do that, because your splits would always equal 0. You'd have your out of 1,000, inflow by 800 and 200, and then that is equal to 0. The other really cool thing is you can get kind of fancy. You could start flagging transactions that are this nature, where they're just affecting your budget, and then isolating them. So if you ever wanted to reconcile to your bank statement, you could say, well, I'm going to exclude all my transactions flagged as blue, because I know those are blue for budget, blue budgeted transactions I don't care about. So you exclude those using just the search feature. Those all get pulled out, and then you can just look at the balance that's remaining and say, okay, am I reconciling with my bank? Anyway, this was kind of not advanced or anything. I mean, it's fairly straightforward, but straightforward math-wise. It's just one way you could consider if you had this small-time operation, but you wanted to track it separately and kind of say, well, how am I doing? Is this more than just a hobby? You could conceivably merge your side business and then your personal into one place and track it fairly easily. You could also just have 2 separate budgets, as I mentioned at the beginning, and track it that way. So kind of your call, but wanted to show this. Some people asked about it and thought it was worth it. I hope it didn't overly confuse anyone. The one thing you may have learned from this is that it's extremely flexible, and that's kind of one thing we pride ourselves on, is that you can pretty much do things however you'd like. We have these rules that are there almost all the time for you to follow and thrive. So anyway, that was today's Whiteboard Wednesday. Thanks for watching, and thanks for sharing YNAB. Please tell your friends.